Hey, what's up, guys? It's Dwad from Gains Lab here, and today I have prepared for you a very comprehensive look at the bullish and bearish cases for whether or not we get a Q4 mania phase in crypto. I've done my absolute best to keep it objective and strictly data-driven, unbiased, remaining objective throughout. If this is the type of content that you like, then make sure you smash the like and hit the subscribe button for your weekly macro analysis. So let's dive in. Let's start with, on the bearish side, looming recession fears, inflation concerns, global debt levels, geopolitical tensions, U.S. stock market overvaluation, yield curve uninversion, weak consumer savings and spending, emerging market debt crises, China's slowing economy, the 200-day downtrend on crypto, the untapped liquidity below 50K, the 18-day bearish MACD cross, the 5-day Gaussian channel, Google trends for Bitcoin historically low levels, weak retail engagement, regulatory uncertainty for crypto. I'll start with all of these recession and global debt and geopolitical tensions and whatnot. And I'm going to refer to Jason Pizzino's wall of worry, which he started back in, I think this goes back to 2023. Yeah. So essentially what this is talking about is that the media will always put fear in the market and basically prevent investors from feeling confident to get in, at least at this stage. So you can see all these bank failures, everything recession, FTX collapse, equities to fall, low rampant inflation and interest rate hikes. There's just one thing after the other. Evergrande back in 2021. You just got so much fear porn always going on in the media. And essentially what he's saying is that even while the stock markets have been doing this the whole time, basically in 2020, it went on a monster rally, had its 2022 correction. And starting here is where the recovery came. But throughout this whole time, there's been so much fear in the markets nonstop. And here we are again. He's created an updated one last month. And yeah, you've got your recessions resurfacing, more indicators flashing, cost of living crisis, war in Iran again, everything, stock markets collapsing, unemployment rising, the Japanese yen and the carry trade and emergency meetings about rate cuts, and just always some form of fear. I'm not trying to discredit most of these points, but I'm just pointing out that these fears have been there pretty much the whole time. And meanwhile, the stock markets have done that. Now let's go down to some of the crypto specific stuff. The 200-day downtrend. So we've been in this channel for 200 days, and yes, fair enough, point to the bears. This is lower highs and lower lows. And then we have the recently discovered that, we had the 5-day Gaussian channel. As we have seen in the past, most of the time that it enters the Gaussian channel on the 5-day and starts to close candles inside it, it often gets stuck there for a while and can lead to a bear market. And this is particularly true when it comes from after a big rally. For example, here in 2021, we came down, closed some candles, and then we were basically stuck in there for hundreds of days. And then we came out, and then we came back for the bear market. And so we recently, this one doesn't count because it's not after a monster rally. So we had a pretty strong rally, and then we closed candles inside. And the good news is that we just escaped, barely. So now we will go to the 18-day MACD, which is bearish. And as you can see in the past, the interesting thing though is it's a very lagging indicator. Even here back in, I suppose the second one in 2021 was basically the actual start of the bear market. But I suppose we are having a similar, it looks very similar to the June 2021, where it's like after the fact, right? We've got this MACD cross, but we already had most of the crash by the time it crossed and soon after recovered. So this could potentially be the same thing. Most of the damage was already done. And then when you look at the stochastic, look at that, it just flipped up. And then now we've got a brewing, this isn't confirmed yet, but there's a brewing 2-week weekly RSI, 2-week RSI cross. And that, we already got our weekly one, which we'll come back to later. Where else were we? We had the Bitcoin trends for, the Google Trends for Bitcoin. Google Trends. Yeah. October 2022 was the peak of the bear market, arguably, and it got down to 16. And right now, we are at 17. Yeah, this means that there is historically low interest in crypto, weak retail engagement, and you could look at that as bearish, but you could also look at that as bullish because that's where we want to be buying. Let's come back to that later. So we've got the rising global liquidity dynamic EMA, which is right here. We've just had a breakout. So in case you're not familiar with this, the blue line is a dynamic moving, exponential moving average, a DEMA. And this is price in yellow. And when price is below the DEMA, then that means liquidity, global liquidity is falling and weaker. And when it crosses above the blue line, that means global liquidity is on the rise. And what we've seen for every market in the past, I don't have a moving average that goes as far back as the beginning of Bitcoin's time, but you can see that when it crossed below in 2014, that was already in the bear market. And then we had in 2016, we had a rise above, breakout above, and that was essentially the start of the whole monster rally. And then we had a cross below in 2018, that was the bear market, cross above in March 2020, and that was the start of the main rally to the initial top. And then the cross down was on the actual market top in 2021. And we've just had a breakout. And as we've seen in the past, this usually precedes monster rally. Next, we have TradFi and S&P all making all-time highs. This is pretty self-explanatory. Gold, stocks, NASDAQ, SPX. You even got the housing. This is the home builders ETF, and this has constantly been making all-time highs as well. You just this is crazy. It's making insane gains. Every few weeks, it's making a new all-time high. We got presidential election year that they like to boost the policies, the financial policies, and make the economy look good. We've got the quantitative easing, rate cuts, cheaper borrowing, and increased appetite for risk. You've got October, November, and December, particularly in the years that precede the final bull run year. So that's this on 2016. That would also be 2020. And now here we are in 2024. And historically, October, November, and December, you see all the green, they're usually extremely well-performing months. And then we have the dollar in a bear market. You can see the really weak dollar, which it's below all of its moving averages on the weekly. It's hanging on for dear life on these last bits of support. It already broke down from a 1,008-day uptrend. And so once we drop down here, and likely we'll lose that, there's not a lot to hold it up until all the way down 97, maybe even lower. Who knows? But what we do know is that when the dollar is tanking, assets do well. And investors don't want to be holding a falling dollar. They want to put it into the market and put it to use. So we got lower mortgage rates and improved affordability. This kind of tackles the, where was that? Weak consumer savings and spending. So this is starting to kick in with the lowering of interest rates. Basically, people will have more disposable income and potentially more to invest. We've got institutional adoption. We have the 155 plus days post-halving effect, where usually around the 170 days is where we get a strong breakout. So that's only 2 weeks away. We have global tech, DeFi, and Web3 growth, more adoption. We have rising interest in stable coins. According to the halving cycle profit indicator of Kevin Svensson, we still have around 400 days left until the end of the cycle. So we still have a good 40% left of this cycle, roughly. We have the property cycle, the everything bubble. Now, if you're not familiar with this is something that Jason Pizzino focuses a lot on and studied it. It is very fascinating. And I do also believe that this is what's at play. So this cycle ended after the global financial crisis, 2008. And that was the start of the whole new roughly 20 years, basically, give or take, right? You got 7 years of expansion. You've got a little dip, which happened around 2022. And then you've got another 7 years of expansion. And this is what they call the winner's curse, which is essentially where the era of very easy money, which is what looks like we're heading into. We got all this added global liquidity. We have interest rates dropping, quantitative easing. If this continues, we're going to get to the point where everyone's going to get high on free money and it's going to get extra nutty. This is why we call it the everything bubble. And so we are in very lucky times right now to be experiencing this. Now, the main thing is that you got to get out, make sure that you are not left holding the bag. So come 2025, 2026, that is when you want to be. I'm going to be exiting like 90% of everything I own, anything that has to do with investing at least. And when the time comes closer, we still have at least a year for that, or a year and a half. When the time comes closer, I'll be looking further into other potential options like maybe silver or gold. Who knows? It's so far away. It's hard to say right now. We have a golden cross that's for the first time actually on the simple moving average 100 and 200 on Bitcoin, which is extremely bullish. The others, the breakout. Now this one is very exciting. And I pointed this out to my members about a month ago, I think, or almost a month ago. And if you look at this, every time it came into this channel of Valhalla and it dipped in, especially after a falling channel, and afterwards there was a monster rally in others. Even this one that didn't quite touch the channel of Valhalla, but it came really close. Boom, came down, touched it, boom. We'll put on the 2-week. And so just recently, we did have exactly that. We came down, we spent some time down here, starting end of July. And now we have broken out of this channel. We're bouncing off of that line of support that's held since 2015. And yeah, we were buying heavily here. I was already like 95% all in. We have the 1-week RSI breakout. Now, this chart right now is one of my favorites to look at. It's just so crazy bullish on multiple fronts. First, let's start at the top. You have a falling channel, which I believe eventually will be a bull flag once it breaks out. Of course, I could be wrong. Maybe it's going to break out to the bottom and we're going into a bear market. I don't know, okay? So we also have all these moving averages, the 200, the 100, the 50, and the 20. And we just had a weekly close above all of these. This is extremely bullish, guys. We have this midline of the falling channel, and closing above has generally led to us at least hitting the top. But yeah, I'm not sure we're quite ready to blast out yet. I do think that perhaps we come and tap the resistance, come back down. Who knows? Maybe we retest all the way down around 50, this huge line of support. Perhaps we do that and then we move. I don't know. The other interesting thing here is that we have, if we take from the very bottom to the very top, we take a fib line. So this is, yeah, right at the bottom of the bear market, and then all the way up to the recent top. And this is the 50% level. And what we see here is that anything below the 50% is considered weak, a weak market, right? Anything above is still considered a stronger market. If this pattern was happening below the 50%, then we could be a lot more bearish. We would probably be saying for sure this is a bear market. However, it is occurring from the top or from above the 50%. Then we have our stochastic cross up. Now this one can be a little funky because we did have a couple of fake outs recently that still led to decent moves, but didn't ultimately continue, right? However, now that we have the weekly RSI breaking out, I do believe that this time could be the one. It doesn't mean we're going to break out this week, but I think we might have a couple of bounces around here. And then I still like this line that I placed 2 months ago, I think it was, where this yellow channel, and I measured the last few times that we had consolidation patterns like this and just took a guess or put it at the longest possible time, 224 days, which brought us to October 7. And here we are, almost there. We're only 2 weeks away from that. So I think that's a very plausible. That also goes with the halving. There's the 170 days post-halving, which I don't know exactly where it is, but it's something like this. 170 days, yeah. It's more or less exactly, I think. Then we have fear and greed has just had a nice reset. You want to see that. When we're up in the crazy extreme greed, that's the time to sell. When we are in the extreme fear, that's the time to buy. And so on this day here, I remember specifically putting out a post in Gann's lab, and I told all my members, I said, guys, this is not the time to be selling. This is the time to be buying. And where was that? It was, yeah, here. I posted this on the 6th of August. I said, honestly, guys, this is a screaming buy from what I can see, especially with a midterm view. Forget the news. Try to look at the data without the noise and emotions. And then I just gave a breakdown of what I was seeing, focusing strictly on the data. And that worked out beautifully. We bought the Pico bottom, huh? And so what else do we have here? That's my total pros and cons for whether or not we're going to get a crypto mania phase. You can tell that I do believe we are going to get a crypto mania phase. I put some added weight to some of these points. Now, this is the part that, yes, is subjective. And hey, if you think that I missed some bearish points, or that perhaps, yeah, if there's anything else you think for the bulls or the bears, please do comment down below. By the way, if you found this content helpful. It will really help the algorithm. There you have it. I have provided you my comprehensive breakdown and a strong case for the bears as well as the bulls. I've kept it as objective as I could and unbiased. I hope you did enjoy this content. Hit the like and subscribe. And you might also want to check out Gann's Lab, which is my premium Discord channel where you have VIP or a lower tier as well. And just go to wap.com/GannsLab. The link will be in the description. And I hope to see you there. It's free trial for 3 days, so you got literally nothing to lose. Come check it out.